Hello, my name's Alan Foom, and this is the second part of my course for managing your money while job seeking. So disclaimer, I'm not a qualified financial advisor. Information here is indicative, needs to be checked against sources to be up to date. Please seek professional advice before any action or pension or anything other long term, or if you're in serious financial trouble. And also all of this is from a UK perspective. So this is a course I give for Careers Springboard and other job clubs in the Thames Valley to help job seekers manage their money during a difficult time. So redundancy rights. So if you're in the process of being made redundant, this is the situation. If you've been at a company for less than 2 years, then you do not get anything. If you have a 2 years service, you can get statutory redundancy. So the terms are here with notice and length of service capped at 20 years. Weekly pay is capped at £508 a week. So the maximum that you will get in the statutory redundancy is £15,240. However, most companies and other organizations offer enhanced redundancy. So this is where the sums would be greater than the statutory sums, and they may actually be quite considerable. Any enhanced settlement would have legal clauses, and you'll be given legal advice as part of this. Another version is a compromise agreement, which is when you let go with a severance payment. It's similar in many nature to redundancy. Where there will be legal obligations, but the sum of money will be greater than statutory. The thing to bear in mind is the first £30,000 of any severance pay is tax-free. The remainder will be taxed at your marginal rate. Now, sometimes you may be lucky that a company may sort of spread it over 2 tax years to make life a bit easier for you, but that is rare. The remainder will be taken care of in your final pay slip. So that that will be taken out of PAYE. So that's the situation with redundancy rights. Next one is job seeker benefits. Now, at the moment, at time of recording, there are 3 types of benefits: contribution-based JSA, income-based JSA, and new JSA. There's also universal credit, which is being rolled out throughout the UK. To get JSA, claimants have been employed in the last 2 years, i.e. to have paid Class 1 national insurance, be between 18 and the state pension age, which is currently 66, be available for work, including having the right to work in the UK, not actually working, because that's kind of a bit illegal, there's a 16-hour limit, and to prove that they're looking for work. So the Department of Work and Pensions, when you sign on, will be able to help you with all that. Also, JSA claimants receive national insurance credits for their state pension, which is something that could be worthwhile. And there's a website there, gov.uk, job seekers allowance eligibility, so please check on that with where you are. So the contribution-based JSA is available to all regardless of their savings or domestic situation, but it's only available for the first 182 days of 6 months. Eligible, you have to have paid Class 1 national insurance distributions, i.e. to have been working, and you need to prove that you're looking for work to continue payments. And the DWP will advise you on that. Normally it is £74.35 a week, although I think that has been bumped up a little bit during the time of the COVID. But that's being replaced by a new style JSA as part of universal credit. Income-based JSA is longer than that. You will also get £74.35 for over 25s, but there's a limit to financial assets you have. So if you have over 16,000 financial assets, that's cash, bank deposits, shares, etc., you will not be eligible for this until you are. Your partner's income will also be taken into account, but there is no time limit. So that's a benefit which you may have to claim if you are still unemployed 6 months after claiming signing on. Universal credit is a new system that's being rolled out, and it'll combine all the benefits that are there. It's slowly being introduced across the UK, so it depends on the area you're in. Most areas I think now are in universal credit. Being managed digitally, so being managed online. Similar rules to the previous job seekers benefits. Differences are it's paid monthly in arrears like a salary. So the first payment may take up to 6 weeks to arrive, which has been a significant problem for many people because they may not have 6 weeks worth of money to live on. The other benefits, such as housing benefits and child benefits, are also rolled into that, so you get one payment. And you may apply for advance payments, which can be repaid. So effectively, it's like a form of loan from the Department of Work and Pension. Now, there's been a lot of criticism for during this implementation, and some of the problems are being solved. So the website's there, gov.uk, universal credit. Taxes. Well, you still need to pay tax. So tax is paid on any income that you have, subject to your personal allowance. So for example, your benefits and your pensions would be taxed, any bank interest or share dividends, any property income from any second homes, possibly capital gains tax if you are selling assets, and any smaller part-time jobs are usually taken care of via PAYE. Now the personal allowance is the amount of money that you can earn in the UK before having to pay any tax. Now in 1920 it was £12,500 for earnings, £5,000 on top of that for bank interest, and £2,000 on top of that for share dividends. And you'll need to put any money aside for any tax bills, particularly from things like bank interest, share dividends, property income. You may also have to settle up for previous years if you were in arrears for tax for that, so having some money put aside for that is important. In order to try to minimize your tax liability, there is something called an ISA, individual savings account in the UK, where you can invest up to £20,000 for tax-free investments. So effectively anything coming out of an ISA, whether it's sale of ISA, is free of capital gains tax, and income from an ISA is free of income tax. There are also premium bonds from National Savings and Investments where the prices from that are tax-free. Oh, and you've got to pay your council tax as well, although there may be some discounts depending on your situation. So need to talk to HMRC. So we got to try to make better deals because you need to try to minimize your expenditure. So shopping around for better packages on energy, phone, broadband, etc. Sometimes when people are working, they don't tend to bother with things like that. I'll just stick with what I have, but you can save a little bit of money, and that could be really useful. However, your job seeker status may impact your credit rating, limiting your options. So that's something to do. And also you need to maximize your income from savings. So shopping around for best savings account, but be careful with limited access. So, if you're looking your money away where you can only access it every so often, or you can only withdraw so much without penalty. So something to think about in order to try to reduce your expenditure, increase your income. Dealing with lenders, better credit. Now this could be quite a painful experience and an emotion challenging one. So you may have loans, whether they're mortgages or other loans which you need to roll over as they expire, particularly with mortgages that have a fixed rate deal up front. When you move to standard variable rate, that may increase your mortgage liability, mortgage expenditure. Now your present situation, because you have a reduced credit rating, might make this harder. So you need to compare interest rates, repayment terms, etc. And there are various money comparison sites that you may wish to look at to do that. Also important to talk to your lenders to explain your situation. They may be flexible, they may be helpful, but there's absolutely no guarantee of that. And if you are in a difficult time, seeking advice. So there's the Citizens Advice Bureau in the UK, Citizens Advice, which can help you discuss your situation and help you talk to lenders. Using comparison sites and seeing where you are. And if there's an emergency, you can get short-term loans, but they too tend to have very sky-high interest rates. That's something you really would want to avoid if you at all can. But I do understand that this might be difficult. So this is the most difficult part of my talk. Need to look at what you can make in terms of you need to take what you're entitled to. Need to try to make the best of a difficult situation. So we'll now move to part 3, which will hopefully be better.